Mark, good to see you. Today, we're going to talk through 4 ways to a Roth IRA for high income earners. Roth IRAs are a great way to create wealth. Roths offer tax-free withdrawals and tax-free growth, and that money can grow tax-free indefinitely because Roths are not subject to required minimum distributions. But there is a catch. Please explain the income and contribution limits.
Yeah, so a lot of people that make too much money, and again, there's income limitations. So there's two limitations, really. If you make too much money, you get phased out of even being able to do this.
Mhm.
Secondly, you're maxed out on how much you can put in a Roth IRA. If you're under 50, it's 7,000 a year, and if you're over 50, you've got what we call a catch up, so it goes up to 8,000. So if
Mhm.
we're trying to save lots of money or lots more money, obviously we're limited with just the Roth IRA. And then
Right.
obviously high income earners are going to get phased out of even being able to do it.
Right. So this video is for those two camps, people who kind of want to goose their tax-free numbers and people who make too much money to qualify. So let's talk through some options then when it comes to creating Roth. And the first would be see if your employer offers a Roth 401k because this has no income limit.
Yeah, exactly. So you can make all the money you want and have all the taxable income you want, and you can put up to the maximum in the 401k. And I'm amazed at how many people don't realize that their employer actually offers this Roth feature. So I always urge people to say, look, call your custodian, find out if you have a Roth feature attached to your 401k. And then what you really want to look at is obviously, yes, should I be migrating my tax deferred contributions to after tax going into the Roth? Now,
Mhm.
realize if you have a company match, that's always going to go into the tax deferred side.
Right. Right. Good point. The next strategy, something that we've talked about a lot, a Roth conversion.
Yeah, so Roth conversions. Now, a lot of people are talking about this. Should I do it? Should I not do it? And really, as a lot of these answers, it depends. But
Mhm.
if you have a common belief that tax rates are going to go up, for most people, Roth conversions mathematically will make sense. But there's a lot of considerations that go on here. But simply put, what you're doing is you're taking money out of the tax deferred bucket, paying taxes now while tax rates are low or on sale, and then ultimately converting, allowing that money now to grow tax free. And then in the future, when you take it out, when tax rates are higher, that's where you get the benefit.
Right.
And when you pass it to your kids, it's going to go tax free to them versus taxable. So you've
Mhm.
eliminated the IRS as a beneficiary in that account.
So important. Another option is a backdoor Roth. How does this work?
Yeah, so again, we go back to those high income earners that can't contribute to a Roth IRA. What they can do is they can make a contribution to a regular IRA, but they don't get the tax deduction. And then they immediately convert that to a Roth IRA. So that's kind of a loophole that gets around those income limits for high income earners. But again, we're limited on obviously what we can put in each year. But
Mhm.
yes, we're adding more fuel, more logs to the fire, so to speak, and building that nest egg.
Mhm. And the last strategy is a mega backdoor Roth, but this strategy can be very complex and you really should consult a professional.
Yeah, so this really is doing it with internally within your 401k. So it's not like we can sit here and explain it very simply and you can go out and do this. But I think you need a qualified advisor that really understands this strategy. And will that 401k plan allow you to do that? Some will, some won't. But again, this can get more of the money out of the tax deferred 401k into that Roth. That's where we want to go with this. And it's really about creating that tax roadmap, because ideally where we want to get with people is get to more of a tax-free retirement, because we know, look at the deficits. I mean, they're skyrocketing. How else are we going to get out of this? Tax rates have to go up. So
Mhm.
why not pay taxes on our terms instead of paying taxes when tax rates could go up significantly in the future, robbing us from valuable cash flow that we'll need throughout our retirement?
Right. Well, it's good to know there are strategies then that people can consider if they really want to increase that tax-free bucket, which should help them in retirement. So, Mark, if somebody wants to talk through any of these options with you, what's the best way to reach you?
Yeah, so you can simply just give us a call, 303-681-0113. We'd love to have a conversation. We can schedule an appointment, a phone call, a Zoom call, whatever you'd like, and we'll address all the questions that you have. And also, if you want, go to our website, mcgregorwealth.com. There, I've got a link to my calendar. You can match it up with your schedule and easily get me or put yourself on my calendar. And again, we can have that conversation.
Okay. Mark, thank you.
All right. Thank you, Aaron.